Here's a secret most people never learn. The wealthiest Americans don't avoid taxes because they cheat. They avoid taxes because they follow a system almost no one is taught. It's called buy, borrow, die. And it's the reason billionaires keep getting richer while most of us pay more than our fair share. You might think you need to earn millions or have fancy accountants to do this, but the truth is, anyone with assets, real estate, investments, or businesses can use this strategy. And if you sell your assets like everyone else, you're actually triggering taxes you don't need to pay. Imagine this. You own a portfolio worth millions. Instead of selling and paying capital gains, you borrow against it, live off that cash, and your investments keep growing completely legal. Then, when you pass your assets to your heirs, the taxes disappear, literally. I'm John Rojas, certified financial planner, and I've helped business owners and investors understand the strategy the wealthy use to protect their money. In this video, I'll break down buy, borrow, die in plain English, show you why it works in 2026, and what mistakes could cost you thousands or even millions. By the end, you'll know exactly why selling your investments could be a huge mistake, how the wealthy actually access cash without paying taxes, and why this strategy is becoming more powerful than ever in 2026. Stick around because most people will completely misunderstand this, and that's why they pay more taxes than they should. So chapter 1, why the tax system feels rigged. The tax system doesn't punish wealth, it punishes income. When you work for money, you're taxed. When you earn income, you're taxed. When you sell assets, you're taxed. But when you borrow money, that's not income, and that's where the game changes. So if you earn $200,000 at a job, taxes hit immediately. If you own $5 million in assets and borrow against it, taxes don't. So how do the wealthy build massive wealth without triggering taxes? Step 1 is the most misunderstood part. Chapter 2, buy, how wealth actually starts. Buy doesn't mean shopping. It means acquiring appreciated assets. Real estate, businesses, index funds, private equity. The wealthy don't buy things that go down in value. They buy assets that grow while they sleep. If an asset grows 7 to 10% per year, time does the heavy lifting. And here's the key part. They don't sell these assets. And this is where most people make the mistakes that trigger massive taxes. Chapter number 3, borrow, how they live without selling. The wealthy don't sell assets to get cash, they borrow against their assets. If you own a $2 million portfolio, a bank will gladly lend you money using that as collateral. Borrowed money is not taxable. Your assets keep growing, you keep control. You borrow $100,000, no income tax due, no capital gains tax due, and your investments continue compounding. This isn't reckless debt. This is strategic leverage. But eventually, everyone asks the same question. What happens to the debt? So let's dive into chapter 4, die, the part no one talks about. This is the most controversial and powerful part. When assets pass to heirs, the cost basis resets to the current value. Decades of gains, zero capital gains tax due. Loans get paid off from the estate. The debt disappears, the taxes disappear, the wealth transfers. This is why this strategy is about legacy, not shortcuts. Now here's the big question everyone's asking in 2026. Chapter number 5. Does buy, borrow, die still work in 2026? Yes, but only if it's done correctly. What's changing in 2026? Tighter lending standards, more scrutiny on aggressive leverage, smarter planning required. What's not changing? Borrowing is still not income. Step-up basis still exists. Asset-backed lending is still legal. The strategy is not for people chasing shortcuts. It's for people building long-term wealth. So, who should actually consider this and who shouldn't? Chapter number 6. Who this is for and who it isn't for. This is for business owners, high-income professionals, investors thinking long-term. This is not for people with no assets, short-term thinkers, anyone trying to copy the wealthy without understanding risk. Wealth strategies work best when they are customized. And that's exactly why I want to leave you with this. Number one, this strategy isn't for everyone. This video was to educate you on what buy, borrow, die strategy actually is and explain to you how wealthy individuals utilize this in their planning. Now, some of you are going to say it's irresponsible to carry that much debt or have loans that you have no intentions of paying off anytime soon, and I get that. The strategy isn't for everyone. This is for educational purposes only. I'm explaining to you a strategy that's very viable and real and effective in 2026 that people are actually using now. It's your job to decide whether it makes sense or whether it doesn't make sense for you. If you want to build wealth the way the wealthy actually do, not the way social media talks about, I've left a link in the description where you can book a free call with me. There's no pressure at all, just a simple conversation to get some clarity. Hit the subscribe button. Every week I break down real strategies used by real investors and business owners. Drop a comment and tell me what part of buy, borrow, die surprised you the most. I'm John Rojas. I'll see you next week.